Sometimes I'll roll it up to 18 contracts. Sometimes, but not all of them are 18 contract type setups. And sometimes they're not all 10 contract setups. Do you go out there with a funded account just simply because you get to that point and start trading like that because you see me doing it? I don't believe you should. I believe you should just do one contract because knowing how to pyramid, build your positions up, that comes with a great deal of experience. And too many times folks think they have that skill set and they quickly find out they don't. And then when they don't have it, that frustration makes them feel like that's the only way they could have been profitable. And that's a lie. That's something that plagued me early on when I was trying to build in pyramiding. I mean, back in the 90s when I was trying to do these things in bonds and S&P, it was scary for me to do it because I was doing it the opposite direction, or not direction, but I was going with one contract, then doing two contracts on my second entry, and then four contracts on the next one, and then eight contracts on the next one. See how fast you're building the position up? And very little movement against you has a great deal compounded effort in drawdown versus where I start with my largest position that makes the most sense, which is less than 1.5% usually. And then what I'll do is I'll build in the largest position entry first, split it in half, put the next one in as I have equity, or if I feel like I'm scaling in a better position size, that I'm getting more insight, like you watched me do today in the PM session. I was literally putting on entry signals or trades. Every one of those could have been your unique model, every single one of them. So that's how many trades I can see in a small fractal on a 1 minute chart. And it's even more when you drop it down to a 15-second chart. You get 4 of those candles per minute. So it allows me to have a great deal number of opportunities and setups as long as I know where the market's likely to go. And it's the time of the day when it should deliver. Morning session hours, evening session hours, PM session. I'm confident I'll find a setup every single day. And you're being made privy to what it is I'm using as the draw, like the magnet on price, that that idea of what makes price go where and why. That's the experience I'm lending. I'm telling you the future with my 30 years of experience of knowing where it's likely to go next. And because I'm teaching you by showing you example after example, I've seen still people saying, what's the point of these videos? You put videos up there with music. I don't like that. I don't like when you send me a tweet like that. How about that? What am I supposed to do with that? I'm not going to bend to what you want me to do. I'm going to do how it entertains me, and I know it works. It may not fit you. Just turn the music off and just watch the chart and go into your own charts and annotate what you see me doing. Because if you just watch the videos, the little vignettes, the small little ones, 2 minutes or whatever on Twitter, and that's all you did, just watched it, you wasted your time. Because I'm showing you in a very small, encapsulated portion of time an entire thought process. And I'm showing you how I'm in alignment with the algorithm. I'm placing myself exactly in the marketplace when the algorithm is going to deliver price a specific way. And just having that recording saved on your phone or saved to your computer and saying, yeah, I got that saved. It's in the archive of ICT. That's waste. That's doing nobody any good. So what? You have it saved. I'm not deleting anything. You don't need to worry about it. But you need to go into the chart in the video and match up what you see on your chart and annotate that. There may be questions about what it is that made me have a concern about that specific level. Okay. And you take that question and you put it into a topical area in your journal and you write the question out. And then you keep watching what I'm doing all year long. And you're going to find the answers to those questions because I'm going to invariably answer it. And that's what I say all the time with folks that come to my channel. They're all worried about, where do I start? Start wherever you want to start. I mean, really, I mean, there's no real perfect way of doing it, but if you want to, you know, take advantage of what I'm doing this year, you want to be joining what we're doing right now because it will force you to see what it is I'm showing you right now. You'll also see that I can do it. You'll see that the market does, in fact, go where I'm outlining beforehand, and it's fun. It's an amazing interactive study that for a number of 6 years or so, only my private group had the opportunity to see this type of stuff, and we did this every single day for years, every single day. Okay, and you probably listened to people and heard people or seen things that were made up and photoshopped and contrived and or conjectures on people's or opinions for folks that were never with us in our community. Okay, I've opened up and now showed all of you, and you're getting to see it. So hopefully it encourages you. Hopefully it's not just a matter of being viewed as me showing off, because I can show off. Believe me, this ain't showing off. I'm teaching you, and I'm giving you example after example every single day, every single week of these things repeating. So that way, number one, the concern that most of you have is that, can anyone do this? Forget that you don't know how to do it yet, because everybody doubts whether or not they're going to be able to do it. But the question is, do you have someone teaching you that can do it? Because if I can't do it, if I can't prove it, if I can't show you what it's likely to do, and I can't execute, and I can't manage a trade with a stop loss and build in a larger position, how many times have you seen me do it? It's the same thing every time. Precision, precision, precision. And it's going to levels I've outlined beforehand. So it's allowing you to take the fears and the anxiety that you have, which is reasonable. That's normal to have that in the beginning. Everyone has that. But I go out of my way to try to make it, well, encouraging. Because even though you know in your heart you can't do what I'm doing right now, you know that I can, so therefore I am an authority in this because I can show you and I can tell you beforehand what it's going to do. And because I'm doing it repeatedly every single week, that shows consistency, it shows continuity, and it shows prowess. So that way it dismisses and disarms, in my opinion, it should, the students that are guarded. They feel like, I don't want to do too much investment of my time and energy in this because this could be a scam. Oh shit. If you can't see this now being exactly what I've always said, honestly, even the live streams aren't going to do it for you. It's not. And that's fine. If some of you don't want to learn this, that's fine. You don't have to. There's plenty of room for the folks that want to learn it. And it ain't going to diminish the effectiveness if you don't do. I'm going to still do it whether you like to do it or not. And I believe that if I had this coming up, like I would literally be walking around like bouncing, excited. Because when I was first learning, I didn't believe this type of precision, consistency, foresight, and understanding about what price is going to do. I didn't believe that was even possible. I thought it was just like, well, once in a while people get lucky. This ain't luck. This is technical science. These things are measurable, they're repeatable, and it's a transferable skill. Look in my timeline. You can see folks that did these trades themselves. Not exactly like mine, obviously not to that degree, but they were still getting in the trades without me telling them how to do it. You know how they got there? Logging, journaling, studying, back testing, all the boring things that most of the students that come to me and quit or fail or complain or just say, well, this guy's probably a fraud because I couldn't learn how to do this. He complicates it. How complicated is knowing a level that it's going to likely to reach to? wait for a displacement in price in that direction, wait for a fair value gap to form, wait for it to return back up into that fair value gap if it's going to go lower, and then engage it, put the stop above the fair value gap, and then ride it out. How hard is that? Like, that's the easiest way of trading there is. You don't need any trend lines. You don't need any kind of indicators. You don't need anything except for reading price. Like, that's easy. There's nothing simpler than that. There's nothing out there simpler than that. You don't even need to put a moving average on here. What do you need the moving average for? You already know what the draw and liquidity is. It's dumb. You don't need a moving average. You need none of that stuff. You need a clock that has the right time for New York time, and you need the open, high, low, and close. That's it. 1 minute, 5 minute, 15 minute, hourly chart, 4 hour chart, or daily. Whatever you want to use, they'll all deliver price. But a move on a 4 hour chart isn't going to have as many opportunities to enter and engage that a 1 and 5 minute chart would. Like, I can get in all kinds of trades and build up a position, enormous position, like putting new links on a chain from the main parent entry and all the subordinate entries that would be after that one. It's just simply just adding another link. So it's a chain reference from where I'm entering to where I'm thinking it's going to go. And that link of chain is just adding more, well, links to the chain from where I want to be in the marketplace initially, and where I believe the market's going to go, or terminus, final target. So I'm having fun doing this. Okay, I just want to let you all know I'm having a lot of fun. My wife thinks I'm spending too much time doing it, but I told her, I said, I warned you. I told you what I was getting ready to get into, and this is it. This is it. Yeah, last year I'm going to do it, but I'm having fun, and I see the feedback, and I see the folks that are really engaging and studying and proving that they're putting forth the effort, not just casually Netflix viewers. And now I feed off of that. Like, that gets me going. Like, it motivates me. But I don't want any of you to take what I'm showing you in these examples as you're going to be able to trade just like that after this year. That will not happen. That won't happen. But you will be able to use that model I taught last year on YouTube for free. You'll be able to trade that model proficiently, without a doubt. You'll absolutely know what you're doing. You'll know how to determine the bias. You'll be able to tell the bias for the day. You'll be able to tell the weekly expansion direction, where the most expansion will occur for that week coming, and you'll know the bias for each individual session, and you'll know when to avoid it. And I think if you learn those skill sets and you have done the work in studying what my entry criteria is for a fair value gap, a breaker, an order block, optimal trade entry, something to that effect, you'll have what you need, and you won't need to do anything else. You won't have to stay hand in hand with me. You won't have to keep coming to my channel, and you won't have to go to anybody for anything. You'll be an independent, free thinker, and you'll know exactly how to engage. And over time, when you get to the point when you can get to a funded account and you can withdraw money, or you have your own money and you trade with live funds when you decide to do so on your own, once you start taking in that kind of extra stream of income, it encourages you. It makes you feel worthy. It makes you feel more capable as an adult. And it gives you confidence that even though things are getting expensive and they're going to get even more expensive, you don't have to worry about falling behind in inflation, because the skill set you're learning is going to always outpace inflation. Like, do you foresee yourself worrying about the price of gas per gallon if you can make, not just in a day, but let's just say you can make 5 figures in a week? Are you going to spend much time at all worrying about the cost of gasoline, or the cost of a gallon of milk, or a loaf of bread, or clothing for you or your children? You're not going to worry about those things. And that's what I'm trying to do. I'm trying to provide a way for you to get that skill set, so that way you can live a little bit more comfortable life. I'm not promising you're going to get rich. the apt pupil can see the opportunity for something like that. But I can't, in good conscience, promise that. But I can promise that you will learn how to read price. You'll be consistently able to read price. The default and result of that is whatever you want to make it. If you want to build this up to a big, you know, monstrosity in terms of trading revenue, who says you can't do that? Who says you can't? So it's a matter of perspective. It's a matter of what you're doing this for. And I don't want any of you to see what it is I'm showing you and think, okay, well, this is what he's promising I'm going to be able to do at the end of the year. No, you're going to be able to do one solid setup per week, one good setup that you're going to be able to find. Without a doubt, you will find one that will at least attack one of the major expenses you have for each month, and that's usually the rent or the mortgage payment. And recently, groceries is getting real close to the average mortgage or rent payment now. So if you could have that coming in, each month, that is a huge weight off your back, anyone's back, right? So I'm trying to start you like that. Get low hanging fruit objective. Think about what I showed in that ends series. You make an ends meet. That mindset, that was what I was cultivating leading into this year. So that way you know why you're doing what you're doing. You're not trying to be the biggest recipient of a payout. That's not what any of you should be aspiring to do right now. Largely because the markets are very difficult. Right now, these markets, I have never, okay? Listen, your teacher, your mentor, Mr. Everything, Mr. Wonderful, this is the hardest the markets have ever been in 30 years of my engagement with them. I've never had markets this choppy, this reluctant to move. It's spending a whole lot of time doing time distortion. You call it chop and consolidation, but it's entering longer phases of just meandering around. And you have to be very careful in these conditions, because even though there's a potential for the market to move, they can be delayed and the move take effect and do it in shorter time. But if you weren't on right then and there, you missed the entire thing. So it requires you to be, number one, patient. You need to be nimble, being able to get in and get out. And also, you have to have the skill set of knowing the condition that you're about to enter, or that you maybe have just entered a trade and you realize once you get in, oh no, I'm in the mud. Like I'm stuck. Like it's molasses. It's real sticky. It won't let you move around. And as soon as you identify that, as a new student, the best thing you can do is just collapse the trade and just view it as you protected yourself. It's like playing cards or poker. You got a hand. The chances of you winning with that hand is probably very slim. So are you going to bet more money? Some people do. They try to bluff. There's a lot of people in the industry as gurus and teachers and such, and they compete with one another, and they like to bluff, bluff, bluff. You don't want to bluff, or try to dare the market, to arm wrestle you, and by you putting more money into the marketplace or opening your stop loss or removing your stop loss, that would be foolish. And I saw a comment that I'm not letting comments on my YouTube channel anymore. You're welcome to put a comment on Twitter, because I post a link on Twitter. So if you want to leave a comment, you can do it there. It's too much babysitting on YouTube. All these people scamming, pretending to be me. WhatsApp phone numbers. I don't even use WhatsApp. But gentleman was saying, hey, why'd you take off your stop loss in the trade that I shared the other day? I didn't take off I don't ever take my stop off. I always have a stop, and my stop reduces and gets closer to my entry as the trade moves in my favor. I'm never opening it up or removing it. But I want to talk a little bit in a couple minutes and get off here. But tomorrow, if you open up your E-mini S&P daily chart, I'll give you a minute or two to get there. The symbol on TradingView is letter E S H 2023, and it's the daily time frame we're going to be looking at. All right, so if you look at what we've done thus far for today, we started trading for Wednesday already. At 6 o'clock, we started trading, so it's been trading for like 2 hours. Yesterday, which is technically still today for me, Tuesday's trading on January 17th, it created a higher high, and we traded up into December 14th's closing price on TradingView. Okay. Look at the candlestick for January 13th and January 12th. See how we have those really long wicks towards the low of each of those candles? There's really no imbalance in any of that. And we have that really long wick on December 13th. See that? So we're in a weird area for price. There's nothing really one-sided. In other words, my preferred way of trading is to look at the weekly range on a candlestick chart for the weekly chart and determine where I think the most movement's going to be, higher or lower, based on the directional tendency for the weekly chart to gravitate to a pool of liquidity or an imbalance above or below the marketplace. Either one, I don't care, but I'm spending most of my time looking to trade in that direction. Then I'm trying to time, if I'm bullish for the week, I'm looking to do a Monday, Tuesday, or by New York session entry long. And if I don't get that, then I defer to intraday trading. And if I don't get the daily range for a day, then I'll go into sessions and scalp and do small little intraday swings per session. And that's how I've managed myself, throughout the years. And that's how I teach my students. I don't have, looking at the daily chart right now, I don't have a clean read on a directional bias that's high probability right now. I don't see it obviously going higher, and I don't see it obviously going lower. So because I can see no real easy directional reach for the next draw on liquidity, I'm neutral, especially now since we've taken out our sell-side liquidity pools, which was today's target for Tuesday's trading. I was able to capitalize on the PM session, but I was not able to see beyond that. And I still don't. I have no idea what to expect going into tomorrow. I don't know what to expect going into London.